Hello and happy Friday here at the lunch hour. Rob Morales, RCO Network, coming at you live with a couple guest hosts today, talking about money, talking about finance, talking about your wealth, your future, everything else you got going on. With me today is a special treat. We don't get to see him very often, but he is back in action. Senor Triple F, Francisco Ayala, Coleridge Group.
Hello.
There we go.
I'm
Back in action, folks. Also joining us today is Sacramento Satoshi. If you want to know your Bitcoin news, he is back in action today, too.
Still in action.
Yeah. So again, Rob Morales live here on a Friday, talking about money, talking about your money, possibly. But don't listen to us because we're not here to tell you what to do. We're just here to have fun and entertain, but talk about money, too. So, how's everybody doing?
Talk about life, man. I'm not talking about life. That's the important thing. What about money?
Yeah, we got two bald guys between a guy with hair. So here, listen. So we're here. We talked a little bit before the show started, a little bit more about, I think, approaching finance in a global perspective. So every morning when I wake up, I grab my cup of coffee, I grab a banana and some granola bars, and I sit down with my phone. I try to listen to the nightly news the next day, as well as just some regular news to kind of see what's out in the political, social world. But then I also pull up my iPad and I'm looking at my my portfolio and seeing what kind of stocks. But I know I'm fairly unique in that regard because not a lot of people out there do. A lot of people out there just wake up, get the kids ready, head out the door, and then get to work, and it's an unfortunate part. But what I see out there are people not really managing their money, or at least outsourcing to somebody like Frank to manage their money for them. What do you guys see? Or what do you guys do in the morning? I don't know what you... Frank, what do you do in the morning?
What do I do in the morning? Well, I also have my coffee, but then I take the first hour just to relax and meditate. And
oh God, you're gonna do all that, huh?
With journal.
Yeah, that works too.
And, I need to get ready for the day, man. It's I can't just go at it. My whole rest of the day is gonna be looking at money situations and finance and personal finance and all that kind of stuff. So I need that first hour just for me to kind of get centered and grounded. For my clients, I don't think, that's like you said, it's that people that cannot manage their money, either because they don't want to or because, they have other things and stuff like that. Yeah. More other priorities like kids and work and businesses. So those people, they just don't have the time to be able to read the news. At least, they'll probably skim the news and know what's going on, and they'll hear on the radio the Dow is up here and stuff like that. But they're not going to try to do anything with that information. They're not going to say, oh, Biden said this, maybe I should sell energy stocks or buy energy stocks or something like that, right? They just don't have the time for that. So
yeah, what about you, Henry? What do you do in the morning?
Satoshi, I will admit, I guess probably the first thing I do as I get up, I take a shower, I have coffee, and I look at my portfolio.
The reason I bring it up, I saw you came by for the weekend, and I saw you do the same exact freaking thing. It would make sense that we're both related. So,
well, I'm just looking. Okay, did I make money today or did I lose money today? That's just, and then I kind of take a look, like what went up really big and what went down or big, or what are the big changes. And then if I go to work, I usually go to work and I read the paper regarding whatever I saw in the morning.
Yeah, because I think the big news this week was Zillow and kind of the decisions they made, and when it comes to housing affects everybody. I think everybody out there realizes, or at least has seen firsthand, that rental rates are going up. That they either been priced out of the housing market, or they hear that the housing prices have gone up so much that nobody can afford to buy a house. A lot of people just kind of go off of superficial headline news and really don't get involved in any of that. And housing is one of those larger investments, we were talking before the show. When it comes to housing, people don't necessarily park money aside or seek out a financial planner. They just go and do the things they need to. They hear, growing up in a small town like us, they hear you need to get married, you need to buy a house, you need to buy a car. And then, at some point you cash out on your pension and then you're done. I'm like, well, there's no pensions anymore. And majority of people's investments end up being their house and only their house.
Yeah,
Yeah, I mean, so with yeah, for a lot of the average American, I think the majority of their net worth is going to be, or half, or a good chunk of it, 40%, 50% is going to be tied in their equity in their house. And so yeah, it does make up a big component of it. But that's a liquid, right? I mean,
Yeah.
unless you're gonna wait for a reverse mortgage back when you're 68 or something, you're not. It's kind of hard to live off of that. And so it's a good idea to start setting aside those liquid funds, right? Those investment funds, brokerage accounts, 401ks,
Yeah.
and that kind of stuff to be able to have those other sources of income in retirement or whenever.
Yeah, and Henry, you, I'm sorry, Satoshi.
I go by Henry too. It's fine.
I like Satoshi. We
Good
all
name
have
is
to.
Henry.
I still need a nickname, by the way. But we grew up in a small town. Frank's from the same small town we grew up in. And again, it's not one of those discussion pieces we ever had. Like we need to sit down. Hey son, you need to sit down with a financial planner, or you need to read a couple of these books because they're well investment. You should choose a Roth IRA versus a traditional because there's certain tax benefits. My dad was more like, hey, you need to get a job and with a good retirement, and then that's it. I mean, that was pretty much the discussion of financial anything planning. Hey, don't spend your money. I mean, that was pretty much it. And I think what's a loss, especially in this education system, is the knowledge and the things to know about finance and how to make money, grow on money. And so much of us, I think this culture really kind of diminishes that. What you think?
Yeah,
Well, go ahead, Satoshi.
well, I was just gonna say like buying a home is like one of those things that your mom always told you was a good thing to do. So most people feel comfortable
Yeah.
doing that. But the thing, I mean, you can, and it's a good way to store wealth, I guess, if you buy a house, invest in it, then you get to retirement. Though, how are you going to get money out of that house, right? You need
Yeah.
more assets other than your house, unless you, let's say, what a lot of people do is, they'll buy a big house and then when they retire, they'll sell it and downsize somewhere, try to buy a house for half the price, and then use that money. I guess that's maybe what a lot of people do, but yeah, it's just, I mean, the real estate is just one of those slow moving, more stable things that people are more comfortable doing. So they do that. And you're right. It's like the lack of education and other things, unless we talked about this
Yeah.
before, like unless you're doing like business or accounting or something, you get very little education in how to deal with finances. And it's one of those things that impacts you every day.
Yeah.
And I mean, so I studied business in college, and I mean, even after a business degree, finance degree, because I majored in finance, you're going to learn the basics for sure. You're going to learn about, balance sheets and this and, how to compute formulas and stuff like that. But they're not going to teach you the psychological skills that you need. And they're also not going to teach you how to actually do it, how to actually put it in play day after day in your house, how to manage debt, how to manage, they're not personal finance courses, is what it is.
Yeah.
They're kind of more corporate finance, right? If you do some sort of business degree, it's going to be corporate finance, it's going to be corporate accounting and that kind of stuff. It's not going to be personal finance. And it's not going to be like, what is your debt to income ratio? What is your savings
Yeah.
ratio? What is this? What is that? I mean, that's stuff that you actually have to either go out on your own and try to find all that information, which is a lot because it's
Yeah.
not just about debt. It's about investments. It's about asset allocations. It's about having the proper life insurance, home insurance, disability insurance. It's about estate plans. It's about, I mean, all of that is personal finance, right? And so either you do that on your own, or you work with a financial advisor who can help you with that.
Do you know somebody
Um,
that I can reach out to, Francisco?
well, as a matter of fact,
Your name is in
my
the description, so ways to
my
contact
name is in
Francisco is there.
descriptions. Yeah, that's exactly what we do. Is because, yeah, like I said, I mean, a lot of people either they don't want to, they just don't feel compelled. I mean, you should have at least some interest in your personal well-being,
Yeah.
in your financial well-being, but you also don't have to go at it alone. There are people that can help you make these decisions just to see if you're on the right track, depending on whatever life goals you have, whatever wonderful life you want to live, or will you get there,
I want
right?
my yacht.
Eventually. Yeah. So,
And I think
but
there's a general trend, like you were saying, my dad's uh, way of investing was to depend on the company or the government in the form of a pension or social security. And I'm just going to work every day, and then somebody will take care of me at the end. And then that's transitioned to kind of our generation was more like, well, you got to start saving in a 401k, dollar cost average, in a mutual fund. And then you see like the millennials now are they're very interested in the Robinhood, and let me, you know what, let me try to, I want to make some money for myself and see if I can
Yeah.
figure out this stuff. The only risk with that is that, they tend to go with the more risky stuff. And are they going to get jaded in some way? Like, are you going to buy a Shiba Inu and then lose 50% and then like, oh man, I knew I shouldn't have done this. I'm out.
Yeah.
Yeah, yet to be seen.
Well, and I think the culture, the newer generation that's coming up, is, I guess, used to kind of that metaverse, this fake world out there where Bitcoin is significant and it really doesn't mean anything at the same time. I can throw in, a couple thousand that aren't mine and have be supported by my parents because I'm living at my parents' house. I can throw in a couple thousand and, let it ride or whatever because I have that support. And not really being educated. Like the girl I talked to you about, my friend, that she's like, hey, you need to buy that coffee place. What is it called? Everybody's going to
Dutch Brothers.
Dutch Brothers. It's like, you need to buy that stock. Check it out. Just IPO today. So she bought stock, and I looked at it. I mean, I don't know if you necessarily want to buy IPOs because you want to see how it functions. But it's had some good gains. But anyway, what I mean is like this culture is kind of supporting the fact that the whole mindset of scarcity isn't necessarily present. So the shift, and we talk about emotions all the time. Having that scarcity mindset, I think, is anybody that's pretty much 35 and older, and that wants to hold on to things tangible, has to feel real. Like I'm holding on to gold miners stock for I don't know what reason because they keep losing money. Because I feel like gold is very tangible and it has some value. But, when people are parking money in Bitcoin and just like letting it ride and letting it go up to 60, letting it fall to 35, and it's like, oh shit, okay, that's fine. I'll buy some more. And then that goes back up to like 65. And you're like, how the hell do you do that? It's like getting in a car accident and then say, hey, fuck it, I'm just going to go in the car and go see if I can get another 100 miles out of this thing. It's just crazy how things function and our cultural mindset. And again, where we came from, I think, because we're all relatively the same age, is that kind of scarcity mindset. A dollar means something, where like in the newer culture, a dollar really doesn't mean as much because it's a digital, it's just a digital amount, they can play with. Right?
Well,
I think.
Go ahead.
I think a lot of it has to do also that for the last, 10 years, 11 years now, except for that blip that we had last year because of COVID, the market has just gone up. They don't know. I mean, so basically people that are, under 35 or even in 40 or 45, most of their investing careers, they've only known up, right? Especially in the last year since COVID, or year and a half now since COVID, they've only known up. And so they think it's super easy to be able to do this in the long run, right? When you're talking of your whole life and plus, your career plus retirement, another 40, 50, 60 years, whatever it is, 70 years, they think it's just going to go up, and so there's going to come a day, I don't know when, next year or 2 years or whatever, but there's going to come a day where we see a pullback on everything from Bitcoin to stocks to, a whole bunch of other things. And those boring, dumb things like bonds are going to look pretty nice.
Bonds?
Right?
What are you talking about bonds? There's no such thing as bonds in this market.
Right. But right now, it's like, anything goes up right now. Any IPO, the Allbirds just went in, all these things. Everything is just up right now. And so people get used to that and people get accustomed to that. And, but there will come a day. So
Yeah, I pulled up Dutch Brothers, and again, she said I bought IPO, and I mean, if she did buy at that $30 initial IPO, I mean, she's doubled her money basically. It's up 50%. You know, that's at $67 right now, even at a on a sell. But this, you know, coming into this is like, how do you frame this, and how do you know what direction it's going? And this is Dutch Brothers. Yeah. This just IPO'd September 15th.
Well, I think we talked about on your show a couple weeks ago. You know, my feeling on IPOs is
no,
they're high risk.
No.
IP no. For the most part, just because the risks are so high, it's more like gambling. You had a lot of statements there. So the reason everything is up is because there's a lot of liquidity in the market.
Yeah.
So when you produce and send out a bunch of money everywhere, that money goes places. So you may think that the market is super high, and you may think housing are super high, but they are probably not as high as you think. It's just an illusion. The dollar has decreased.
Yeah.
And so people see that. They see like, oh, wow, the stock market is all-time high. I go to the grocery store and everything's twice as expensive. That's the desire I want to gamble. I want to get in on that, and I want to make some quick cash.
Yeah.
But the other thing is, like you said, you like gold because that's what makes you feel more comfortable. So again, we talked about how emotion can mislead you.
Yeah.
Okay. I buy gold because it makes me feel good, and it's done well in the past. I don't understand why it's not doing well in the future. And the reason is because you have to understand what Bitcoin is and what cryptocurrency is. It's, if you think about it, like, it's the only area of mathematics that is, you can still manipulate. So like weights and measures, we have a standard. So 1 pound is 1 pound here or in England but it's not that way with money. So people desire money that's immutable, that somebody can't manipulate, right? Because the end result is you go to get gas. I was going to take a trip with my gas car, and it's like $80. Like, whoa, I went out to dinner, and it's like, for my family, it's $150 now instead of $100. So all these things are going up, but that's because of the liquidity that's out there, and I think that's why people want to invest.
And
want to get a piece of that.
And I think, again, we're getting into more of a speculative market, where tangible assets really aren't as significant as they were, and I think a lot of people, old-timer investors, are still kind of on that. And what's getting the headlines is Bitcoin, and because of you and Satoshi, you suggested getting CleanSpark, and again, I'm not a big Bitcoiner myself. I still have my doubts a little bit, but when you said, hey, you should look at CleanSpark, and I ended up buying 50 shares. I think I bought closer to the $14 level, and I'm up like 40%, in a matter of like a month. And those are the stories. Those are the things that people want to go and tell, at the water cooler about. Like I said, I bought around the $14 price, and now it's shooting up. Even on this sell, bar, I'm still up, and it's exciting to see that. And I get caught up in the emotion of it, and I'm like, well, I should have parked more money in there, but you really don't know, and it's still kind of an unknown thing out there. I mean, mining basically digits on a computer is just an absurd thought. Where like my mining stock, which is I have Vale, so that's the nickel mining. I have Barrick's Gold, and I have Kinross. Those are all tangible gold mining companies, and they're all in the shitter right now. They're all like tanking, and I'm just holding on. And it's a falling knife basically, and I'm just holding on, thinking that if there is going to be an adjustment in this market, that those will pick up, but it's not. And a lot of people's investments, especially this newer age or newer culture, is going into stuff like CleanSpark and Bitcoin. Even Bitcoin is going up too. Bitcoin's
that's your lizard brain. So you have your lizard brain and your higher level thinking.
Yes, I do have
your lizard. your lizard brains doesn't want to admit that you made a mistake. It's gonna continue to say like, no, this will come back. I know it will come back. But in general, you want to go where the money is going.
Yeah.
If you want to make gains, where will the big investors and the banks and the countries are they? It looks like they're going towards more crypto. So that's why it continues to increase.
Well, and I think that goes back to mindset, and Frank can fill in too. There's two different mindsets when it comes to investing: the short term and the long term. I'm holding on to these gold mining stocks for a long term gain, but on the daily, I'm just like, this is horrible. These gains are horrible.
I mean, so basically, you have to take in mind that you're not doing this in a vacuum, right? You could have just put whatever amount of money that you put into all these different things, total it up. What you just said, CleanSpark and Vale and whatever else you have. Let's say it's $10,000. It's probably more, but let's say it's $10,000. You could have just put that money in the S&P, right, or in a diversified portfolio. It's not like if you're competing against zero, you're competing against just another investment, that with the same characteristics, whether it's stocks or stuff like that. And so the S&P is up in the last year. I mean, year to date, I think it was up like 20-something% this year. So could you have done just better, just putting all that money in the S&P or something similar, diversified portfolio, instead of, so you're up 40% on this one on CleanSpark, but if you take your whole portfolio, how does it compare, right? Are you up 2%? Are you down? Are you up? And so that's what people have to kind of realize, is that you're not doing this in a vacuum of zero. You're doing it against something else that you could have invested, the opportunity cost of investing somewhere else.
Yeah.
And in the short run, you get a lot more volatility, obviously, and so you could do a lot better or a lot worse. But it's kind of in the long run that kind of what matters, right? Is did you spend those 5, 10, 15, 20 years just losing money, right? You could have had a good year, but when 15 years on the road, were you better off just putting all that money in and watching a movie, right? And so,
well, that's typically what it is.
You also have to think about the hurdle rate. So the hurdle, if let's say inflation is 15% a year, and you say, I want to buy Coca-Cola. Look at Coca-Cola, it's a great investment. It went up 15% this year, which I think that was your recommendation a couple of weeks ago. So I looked at it. You haven't really made a whole lot. You just kind of stayed even. So you want to go for the Nvidias, and you want to go for the Teslas, and so because
but how do you know?
Tesla. Well, that takes some work. That takes some research, and you want to look at what is the future.
This is Coke.
Is the future twice as many people drinking Coca-Cola, or is the future twice as many people driving electric cars? That's where the money is going to go. So now, if you can, I don't know what Tesla's up this year. It might be up.
Tesla's up
100%. Yeah. What was it at the beginning of the year? It was up at least 100%. So if you could go back to January, would you want to put your money in Tesla, where you're going to double it, or you want to go in Coca-Cola? So the way I look at it is I want to go into the companies that are going to be the future, and put my money there, because that's where other investors will go eventually.
But I mean, as far as like companies go, how much time and effort do you really learn about a company, or are you just, because everything that I'm reading about, like just as far as swing trading and doing like day trading, is like you really don't care about the company necessarily. You just watch the stock and see, and do guesstimations on that swing in order to possibly gain 5-10% in a day,
Yeah, but that's swing trading. You're talking about, I want to buy something low, sell it when it gets high. So that's a little bit different than long-term investing.
But that's what people are inclined to. That's what people around the water cooler want to do. So you kind of have to like. And I don't know if Frank ever comes across this, but you got to balance out like what people want and what people they need. You need that long-term stability, but what people want are that short-term gains. They want to walk away like, hey, shit, I made 15% today. I made 10 grand off of this one stock. I invested in NVIDIA 2 weeks ago, and look, it went up, 50%. That's what people want. To do that,
you got to go high risk. Yeah. So if you want to make high gain, you got to go high risk. And then you got to tell yourself, well, how much money am I willing to lose? You don't want to put your retirement into
Tesla,
something that you're going to,
What about Bitcoin?
The Bitcoin, yeah. I mean,
But I mean, and I don't know if you want to reveal your portfolio, but like something like Bitcoin is a small part of your portfolio, right? It's a, I think the last time we talked, it was less than 10%,
um,
right?
yeah, it's less. It's yeah, but you're trying to make it sound like it's not like it's insignificant. It is a large portion of money, so
Yeah.
it's not like I'm just
Oh, I'm not
I'm
saying
not
that.
gonna yeah. So if I have something for me as I'm getting older, I want to be less out on the risk curve. I want to go something more stable. And cryptocurrency already is kind of out on the risk curve, right?
Yeah.
So for me, Bitcoin is already risky, but it's like more safe. Like I'm not gonna like again, for example, if you want to buy, let's say Bitcoin, like we were talking about, Frank was saying, things go up, things go down. And so we're getting to the point where we're maybe 2/3 through this cycle. Bitcoin could potentially, a lot of people say it's heading for 100,000, so that's like a 50% increase. If I want to make more than that, if I want to double or triple my money, I have to go out on the risk curve. I got to
Yeah.
go find something like a Solana or something like that that's growing a lot faster. But then, I don't want to put as much money in because if what if it doesn't work out?
Like Shiba Inu.
Shiba Inu to me is another Doja coin. We've talked about that. I if I don't understand why. I mean, that's way out on the risk curve, and that's because you see people. Oh, this guy bought $8,000 last year. Now he would have had 1 billion. But most people don't have the. Most people are not going to write it out to 1 billion. They're going to sell a lot sooner than that, and then beat themselves up because they sold too early.
Yeah.
I would just buy Ethereum. Shiba Inu is built on Ethereum, so why not just buy Ethereum? It's a lot safer. So that's how I look at it.
Yeah. And Frank, you haven't really explored the whole crypto thing yet either, right? That's not something that you're involved in
No,
directly.
I mean, I'm aware of it, but yeah, I'm not an investor in it. Obviously, I mean, looking at it right now, I mean, yeah, that would have been, depending on when you got in. I mean, if you got in at 60, then you're
Yeah.
pretty much break even at this point. But if you got in at, what, because I know people that got in at, a couple thousand, 2, 3,000. And so they're sitting nice and pretty. I wish I was one of those, but I'm not. But, I'm okay.
Yeah.
It's
Yeah.
nothing to the world.
I know I'm somewhere in the middle. I think we have the spectrum between all three of us. My brother's a little bit more risky, I would say, or at least he's more involved on the kind of risky. I haven't really gotten myself involved, but something like purchasing that Clean Spark stock and seeing the gains on it, and I'm like, this has got me, really kind of motivated to learn more of that aspect. But then also too, I have to realize that I can't get too emotional about it. Just as emotional as I'm hanging on to these gold miners that don't do anything. I'm really hoping next year as things like today, with the unemployment numbers coming up, all those miners, all the stock prices just went up on 3 of them. I'm like, oh, wow, I'm actually gaining something. I'm gaining my money back because I just lost, roughly about 20% on all of them. But that's for another show. But, again, I think it depends on comfort level. I think people should reach out to you, Francisco, especially when they don't know anything, and I think a lot of people act like they do, or at least they heard a rumor, and I think it's a very uncomfortable thing for people to talk about. But yeah, I know you that you always look after their best interests, not just because you're a fiduciary, but just because you have a good heart like that. And so that's the one thing I've always reached out to you. And when I've had questions about those things, that's why I've gone back to you.
Yeah, right. I mean, at the end of the day, for most people, I mean, if you're into investing and that's a passion of yours,
Yeah.
by all means, right? By all means, have at it. A lot of people, they have other passions, right? They want to go fishing. They want to go hunting. They want to
Yeah.
go spend time with their kids. They want to do a hobby, music or whatever it is. And so, if you don't have the time to, I mean, just get your personal finance in order, let alone invest, research companies and, Bitcoin and all these other cryptocurrencies. If they don't, I mean, a lot of people, they just don't want to do that, don't have time. So yeah, there's other ways that you can be financially responsible financially prudent, and working with a financial advisor that kind of understands what you're trying to do, right?
Yeah.
Understands that for you, it might not be all about investing and getting into the weeds. It might be just kind of having more balance, so.
Or you log into the show at the noon hour every Friday, and we talk about these things and help you out. Henry, you get the last word. We're at the end of the show, sir.
Wow, that was quick.
Last word.
Any last words?
I don't. What's that?
Any last words? Any Ethereum? Anything like something we should watch? CleanSpark was good. You got me on CleanSpark.
Yeah, I don't know. It's getting harder. We're moving up to everything's at all-time highs. So it's you got to look for those deals. I think this week was mostly like the reopening stuff. Airbnb was up. I told like you were saying, Facebook potentially that was a good buy. I bought some Visa last week.
I did too. Because of you, buddy.
Okay, there you go. See, if you watch the show, you might get some tips. I bought. I think another one I was looking today is Boeing. Boeing's at its trend line. And what else? Yeah, I mean, it just goes down to, it's just like anything else. If you want to be good at something, if you have to put some time and you have to have some passion, right?
Yeah.
It's
or shave your head.
Shave your head.
Join the crew.
But if it's like if I said, if you could go back 10 years and invest in Facebook, Amazon, and Google, and all these companies, and then you would be sitting pretty right now. But you would have to put in a little bit of work.
Yeah.
I'm okay. I like soccer better. And there's some people out there that are like that. I go to work and I'm like, hey, cryptocurrency, money's going in. It's transformational time. You see the gains. It's nothing like the stock market. But you have to put some work in. It's like, I'd rather just watch TV. And I mean, that's up to everybody, maybe some people just I want to do it, but I don't know. I don't want to invest the time. Then get a financial advisor, and have somebody do it for you. But yeah,
Francisco is available.
Either way, you want to improve yourself financially.
Oh, like I said, you got the last word. So I appreciate everybody joining in this week. Always bringing information. If you have any comments or questions, we like to hear those thoughts and things you got going on. So we do like to answer questions. We got a lot of feedback on last week's YouTube, which we didn't even touch upon. I'm sorry. So we'll get to it at some point. But if you leave comments and questions, we'll get back to it next week. So Rob Morales, RCO Network, Finance Friday with Triple F, Satoshi, and the rest of the crew. We'll see you guys next week.
All right. Happy investing, guys.
Laters.